Welcome to Alpha Bytes. I'm your host, Marconi White, and we've got a show so hot, SBF is bribing someone in his jail cell so you can hear it. I'm going to ask the guys to offer odds on Michael Burry's latest bet, but first, JJ shares a brand new metric that may just unlock Bitcoin's price future. Ben Lilly thinks stock to flow has a flaw. Let's figure out what that is. Ray argues that Solana's best days may just be ahead of it. And King Cody, he's going to like or spike 3 projects that are hard to find gems, including a decentralized social media platform, a tokenized solution for private companies, and a better IBC index for Cosmos, and much, much more. I've got Ben Lilly, JJ, Ray, and Cody in the studio. Gentlemen, welcome. Glad to have you here. We're going to kick it off with the market update. But before we do, I want to say a brief thank you to the bear market warriors who tuned in last week and pushed us over 500 subs, our very first milestone. Thank you to each and every one of you. We appreciate you and all the support you're giving us. And listen, if you're the kind of person who responds to 99% of questions with crypto fixes it, then you're like us and we want to hear from you. So I'm going to drop a link in the description to the survey that we're running across multiple platforms because we want to know more about what you want to hear from us and the industry at large. But enough with that. Let's get started. JJ, I'm going to turn it over to you. I want to go through a market update. Now, last week, you were talking to us about how we were on the edge of our seats, ready for some volatility. I haven't seen the market in the last hour or so, but last I saw it, Bitcoin was still at about 29,300. Tell us, were you right? Are we expecting the move to happen later, or were you just wrong on your analysis? Give us a market update.
You haven't missed much. Price hasn't moved much today, so it's still coiling. We're still in that same range. What this says to me is kind of the longer it's there, the larger the reaction will be once we finally get a catalyst, right? So you can think of it like a powder keg in search of a spark right now. And right now I see Bitcoin is climbing a wall of worry. So it's going up steadily. It hasn't broken down. So we've had all these negative catalysts. Obviously, CPI came in hotter than expected. There's a few other macro data points that just show that inflation is actually kind of moving up on the rise again. And these are the sort of things where we would expect a breakdown from Bitcoin. Obviously, ETF delays. So there's been a lot of negative catalysts, but price hasn't reacted to that yet. And actually here on the daily chart, we see that it's whole MA, whole moving average, which is just kind of a combination of many different moving averages and gives you a trend pre-recognition signal. It's flipped green for the first time since June 18th, which was when Bitcoin was around 26,000. Less than a week later, it shot up above 30. So if we can get some kind of relief here in the news cycle, whether that's a positive announcement from the SEC, just a drop in the dollar in general. We have FOMC minutes tomorrow, so if that's perhaps more dovish than expected, we could see DXY revert back to the lows, and I think we could really see Bitcoin take off from there. At the same time, we're just waiting. DXY has been on a pretty steady climb, as I mentioned in this week's article. It's back above major moving averages, which actually leads me to what we were going to discuss today, which is our new indicator. So we call this the DXY Risk. What has it been? The risk rating, DXY risk rating. So we kind of combine several different factors, moving averages, RSI on DXY, and then we pair that up and we give it a color, green being the most bullish, and then obviously yellow, orange, and red. And that kind of moves on a scale of more risky times, and it just kind of shows you that DXY has this moving effect where it can be a leading indicator for Bitcoin. So at times when it's green, that's when you really want to be risk on. Red is when you want to be a lot more cautious. Right now, I believe it's in the dark orange territory, which is telling us caution. So as I mentioned in this week's article, things are looking good for Bitcoin if it can sustain and get a relief in the news cycle. But at the same time, you don't want to jump in too early because if DXY rips up from here, it's going to be pretty brutal for crypto, and equity markets in general are going to take quite the beating. So we're just still waiting. I believe the volatility is going to be on its way by September. Kind of Schrodinger's volatility. The more we're all looking for it and waiting for it to happen, the less likely it's going to be. It's going to kind of sneak up on us at some point. So just waiting in place and being ready.
Your analogies, I heard coil, it's going to sneak up on us. Volatility sounds like a snake waiting in the bushes at this point.
Very much so, yeah. It's like a watch pot never boils, right? So Everybody's sitting there, volatility today. It's going to happen when everybody's away from the screen. But
so I have a picture right here of the DXY Risk Rating, which is a really nice chart, very clear. So you're saying right now this is dark orange. Take this chart and contrast it with the piece you just published on Monday, because I read that. I think everyone on the team agreed it was a really nice way of looking at where we are in the market and sort of how to evaluate the risk. So, give us an update or give us an overview of what you put in that article with the Rossi and how that compares and contrasts to the chart that you have up here.
So in the article, we discussed several different things, kind of just how DXY's strength of late had that big breakdown in July, and then we saw just a V-shaped recovery in it, and it's right back towards the June highs. So it's right back above 103 right now, kind of moving back towards its 200-day moving average, which is at 103.27. And that's above there is when things really get risk off for crypto, right? So if we see DXY back above all major moving averages, it's above 50 RSI on the daily, weekly, and monthly charts. At that point, it becomes very hard to justify a long position in Bitcoin, right? Like DXY has been in a year-long downtrend. So if all of a sudden now it's breaking out, the odds of it going back towards the 2022 highs become pretty good. And they're what Bitcoin's price would look like if DXY were to get to those levels, not good, right? So odds are we're going to retest at least the June lows around 24,000, if not March around 19, and then obviously FTX lows and below there. Who knows? Maybe Capo's 12K target hits. But the higher DXY goes, the greater the likelihood of that kind of a crash, whether it's a flash crash or a prolonged downtrend, become. Vice versa, if DXY reverts from here and makes new year-to-date lows, the odds of Bitcoin moving up towards the 35 to 40,000 range become increased. So what this indicator does is just kind of gives us a signal into DXY's technicals. So it takes a blend of different moving averages and the RSI on different time levels and shows us what if you had to rate DXY on a scale from 1 to 4, with green being the most bullish and red being the most bearish, where does it stand today? And how should you be applying risk in accordance to DXY? So we'll kind of unpack this in pieces and podcasts to come in the months to come. We're still kind of tinkering with it a bit and trying to get a view at longer time frames, but it's going to be something that we'll be hitting on repeatedly.
Okay. Oh, that sounds great. Yeah, it's always good to have something to kind of anchor us and be able to evaluate over time. Ray, I want to pick your brain real quick. We got about 2 minutes left here. Any thoughts here on the analysis? Any contrarian views that you would share relative to what JJ just gave us on the market update?
I agree. I like his viewpoint on the RSI on DXY kind of being in bullish territory and a lot of macro catalysts perhaps giving the dollar strength, and we know what that means for Bitcoin price. I think that's something to really, really keep front of mind because it's so easy to get sucked into just a crypto price action tunnel that's agnostic to macro and other factors that do impact Bitcoin price. So the narrative that we've been hearing for weeks now is volatility is low, accumulators are accumulating, on-chain data is bullish, we're just waiting on this, decisive trending move to take place, and it seems that the bias of everyone who's trading cryptocurrency believes that it's going to be to the upside, when in reality it could be to the downside. So keeping a close eye on equities and what Dixie's doing, I think, is pretty important. Given what we're expecting with Bitcoin price, it can always go the opposite direction of where you expect. So I like that in JJ's most recent article, he's encouraging, kind of guiding people to not go too heavy long yet. Don't become an ape just yet. It's good to just kind of wait and see what Dixie does before casting your bets. I think that's a very good observation.
All right, Ben, we got about 40 seconds left. You have any opinion you want to add?
Yeah, first off, just JJ's metric, it's pretty neat. It's the first iteration looked really great, so everybody should be excited to take a look at it. He always talks about DXY, and this really just summarizes his views of the market really well. And because he's talking about DXY and the Fed minutes are about to be released, one point I would like to make is a lot of people are concerned about liquidity levels in the market and that all this new treasury issuance is something to be worried about and it's quantitative tightening. The one thing I want to point out is that there's $1.8 trillion sitting in repo that can move into the treasury market. It's been sitting around $2.2 trillion for the better part of 2022. So we're just seeing a drop in the bucket, and I wouldn't get overly alarmed, but that's going to be the focal point of the meetings minutes that will be released this week, at least for me.
That's a great capstone for that for that segment. I'm reminded every time we go through the market updates, these are such strange, unusual times when we think about the amount of liquidity that's in the market, and we see the way in which the Fed, the Treasury, and other global considerations, or I'd say trade winds, if you will, are starting to influence the market. So always a lot to evaluate outside the crypto world, and even in the crypto world as we work our way through the bear market. There's a lot to go through. So, guys, if you're out there and you want to hear more about this, I suggest you come back next week because we're going to continue to be looking at the market updates, and JJ's going to be bringing back this new beautiful chart and let us know is it red or is it green. Ray, let's get on to you. Let's move on to you. You've got an interesting take on something I don't think we've talked about much on this show yet, which is Solana. So tell us, what's on your radar?
Yeah, I didn't want to talk about Solana. I guess we shouldn't be partisan on a podcast, but I won't necessarily say I'm a huge fan of Solana. My experience with it has left a bad taste in my mouth, given that in the previous cycle I bought it around $1 and $2, $3 and staked it and rode it all the way up to 250 and thought it would go to 300 or something. And then, of course, FTX blew up and I was staked and busy, so never unstaked it and just wrote it off as a complete loss, like I did with my Luna bags. And then I logged on to Exodus yesterday and turns out it's worth a little bit of money and seems like things are getting better. So that's nice, but I'm not like, a fanboy of the project. But on Twitter or X, I've seen a lot of influencer traders talking about Solana, and it's even coming up on prominent podcasts where all these guys are kind of gushing about Solana. And I was wondering, are these people being paid under the table? Is there some project that they're like shadow associated with, which is dripping money to them to shill Solana? Because when you look at the chart, you don't really see too much happening on the price action side. So I decided I'm going to dig into it and see what's going on with Solana, right? So looking at the price, it has recovered from $9.40 to currently trade around 25. But I mean, come on, this thing was trading for $250 a coin in 2021. Now, some positives are, despite its face value, Sol has outperformed its ecosystem peers. It's up 150% year to date, which is more than BNB, more than Ethereum, more than Atom, more than Cardano, which I would say are also L1 ecosystems with a DeFi component, right? So on the token side, if you just got into it at the quote unquote bottom at $6 to $9, then you're up big and you're doing good and probably looking for more. But technical analysis only gives like 1/4 of the real story. So I decided to root around and look for some other nuggets. So I went to look at Solana's total value locked chart on DeFi Llama. And what I noticed is that its TVL has risen year to date from $211 million in January 2023 to now $325 million. And of course, when compared to other ecosystems and protocols, that's a small number, but it's still growth, and that's better than a retraction. So I view it as a positive. So I wanted to look a little bit deeper to kind of figure out what's behind this TVL growth. And of course, it's going to be related to DeFi. So I listened to some of the reasons on why influencer traders and Solana pundits are so frantically bullish on Sol, and one key talking point continued to come up, and it was DeFi growth, liquid stake derivatives, and LSDeFi. These are major narratives that DeFi protocols and traders are banking on for 2024. And perhaps this is due to its success, of like LSD. LSDeFi has done well. It's been successful on Ethereum, right? And when I looked at the actual market cap or the TVL of LSDeFi right now for Ethereum, it's $8 million shy of 700 million. And Solana doesn't have that happening yet. Currently, you can stake Solana for a healthy 6.98% APY, and as we speak, almost 71% of all the eligible tokens are being staked. But the Solana ecosystem lacks a robust liquid staking layer that gives utility to all of these staked coins. And I think one thing that we've all seen is how entire galaxies can spring up around LSDs when it's available. So I think that that's something to kind of keep an eye on with Solana. Its DeFi ecosystem does sort of movement spring up around liquid staking derivatives and LSDeFi in the same way that we've seen with Ethereum, because that could kind of catalyze like a DeFi summer within Solana, and that could be eventually a positive to its price. Now, there's one other thing I wanted to talk about related to Solana, but I'm going to take a brief pause in case anyone wants to ask questions or has some interjection.
This is an interesting analysis. One question I had, when you mentioned about 70% of the tokens are locked up in staking, do you view that as a positive or a negative?
I don't have an opinion on it. It's the same for Cardano. I think with Cardano, like 60% of circulating tokens are locked up and being staked. And that's great if you got in really early when it was dirt cheap. And the same with Atom or Cosmos. A large percentage of its circulating supply is also locked up and people are earning high yield on that. So if you're a major bag holder, it's free money for you, and that could be like supplemental income. But I don't have an opinion on that, to be honest. I don't view it as bullish or bearish, given if you look at Atom price, if you look at Solana price, if you look at Cardano price, they're nowhere where they had been during bull markets. So I don't think it's a net positive, but we do know that giving utility to staked tokens can be a positive. It can have some positive impact on price and ecosystem development. So that's kind of my view on that.
Okay. So wrap it up from here, I guess. In your mind, you mentioned you had one more data point you wanted to share. Sort of where does this leave you in terms of the bull or bear case for Solana?
I don't have a personal view, but just based off of what traders and different media outlets and analysts are saying, it could be something to keep on the radar because Solana is a laggard. While its token price action this year compared against its peers, it's outperforming it. And of course, there's always room for upside. The actual catalysts that could trigger that upside are what's most interesting. And Solana is a laggard in the NFT space. It's a laggard in the DeFi space. It's a laggard in the LSD space. It's an ecosystem that was really hurt by SBF's actions and the decline of FTX. So it's catching up, or even like if you want to talk about Solana's lack of progress and network activity, if you want to view it as in the same framework as a mean reversion, its mean reversion back to the norm of where its competitors are would be an outsized move and could be a positive for its price. So the very last thing I wanted to say was user and liquidity incentives could also come back to Solana. So that's another growth catalyst I saw discussed by these analysts. If you remember Avalanche, well, I'm out of time, so it's something to look into, but Avalanche Rush catalyzed a huge run on AVAX price and eventually Trader Joe or Joe token price. And if we see the same sort of incentives come back to liquidity incentives and user incentives and developer incentives, if you see those come back to Solana, that could be the flywheel that kind of kicks off its DeFi summer and positively impacts token price.
Okay. All right. So I think what I heard there wasn't a bull or bear case for Solana as much as a view that you could see an opportunity here for Solana from a price perspective. All right, I'm going to do something. The producers are going to scream at me. I'm going to give this the next 2 minutes because I see Ben and Cody on the sidelines. I'm going to give each of you guys a minute to get in here and offer something. Cody, I want to start with you. What do you have to say? We got 2 more minutes. Let's start with you. You got a minute.
Well, I got to say, I am a Solana bull. I always was since I started using it in the last bull market. And the main reason is when it got into crypto, I couldn't use Ethereum. It was too expensive to transact. It was too slow whenever I wanted to do something. It was completely unusable for me. And then I looked around, and Solana was always so easy to use. The UX was great, and the fees were cheap as hell. Now, what happened with FTX was obviously a disaster for Solana, and I think a lot of people thought that it was dead forever. And as it turns out, it really isn't. And what I think we're missing on this podcast, which I don't think we have time to get into it, but it might be something that we tackle in the future, is the technological improvements that Solana as a chain has gone through in the past few months. And while the DeFi, TVL and whatnot, and like applications have been gathering some success and like some more liquidity has been attracted to them, like it genuinely isn't as near, like it's not as close as it could be, considering the technological progress that has been happening over there, which I think is very interesting. I think in the future I think we should discuss it.
Okay, so definitely some pros on the technology evolution side. Ben, I'm going to give you a minute as well.
Sounds good. It's almost like a loaded topic here. We're all kind of at the edge of our seat, want to talk about it. But when I look at it, the TVL in terms of the amount of native SOL that were staked, were well above 40 million in the bull run. And right at the beginning of 2023, that dropped to about 10 million. Pretty significant drop. But if you go ahead and look at the protocols that have some of the SOL staked, it's varied, right? Like Ray alluded to his nice analogy about galaxies and orbits and essentially gravitational pull and all these great metaphors. And you can almost see that metaphor taking shape because in the top, I think 19 protocols, they all have over $10 million worth of SOL staked. And it's not like once you get past the top, looks like 3, it's a nice distribution. So it really alludes to the fact that you might have some great diversity that shows up in Solana. And since that low of 10 million. It's been steadily increasing, and it's about 14 million now. So keep an eye on it. It's primed, it feels like.
Okay. Well, I like the diversity of opinion. And again, we haven't really covered Solana before. It seems like we've got some a real range in terms of the perspectives on the project. I agree with Cody. Let's bring it back. And Ray, I appreciate you bringing it up as something for the audience to look at as a potential opportunity. Ben, I want to go to you and to perhaps one of the most controversial charts in the history of crypto and specifically Bitcoin. It looks like you're looking at stock to flow. Tell us what's on your radar and, why do you think it has a flaw?
One of the most contentious subjects I feel like in the market is what I'll be talking about today. And I'm almost worried as the reactions I tend to get when talking about this model are so varied that I almost find myself defending the model when in no way or shape am I trying to do that.
Well,
but
I'm going to interrupt here and just say, Plan B, you are welcome at any time onto the show. We know you're anonymous. The rest of us are as well. We'll even make you an avatar. You can come on here and talk about your model. All right. Back to you, Ben. You get your full 5.
All right. So, yes, has a flaw. Now, he mentioned the analyst I'm referring to, Plan B. He made stock to flow popular for Bitcoin. And for the uninitiated here listening to the podcast today, the stock to flow is a figure that is a ratio, and it takes the market cap of a commodity like gold or silver, and today's purpose, Bitcoin, and compares that market cap to the amount of new supply of the commodity created in a year. Now, for Bitcoin, this is pretty easy since its supply is pre-programmed. It's really just the market cap that varies, but what stock to flow really highlights is that the higher the market cap goes, the larger this ratio becomes, which alludes to how scarce a resource's supply is relative to its value. This is the scarcity creates value argument many in crypto keep referencing. Now, Plan B famously plotted this ratio over Bitcoin's lifetime, came up with this nice linear regression that helped him model future prices of Bitcoin. One of the more memorable articles from Plan B was on his Medium page back in 2019, where he dropped a $55,000 price target for Bitcoin post 2020 halving. We know now that price went on to almost hit 70,000, and looking back, I think we can give that a solid B plus A minus prediction. But what people take issue with, and for good reason, is that after that initial prediction, he let his bias creep in and rationalized that figure through a new model and said $255,000 could happen post 2020 halving cycle. And more recently, he went at it again and forecasted just over $500,000 price point for the next cycle. So
500, $500,000. Is that right?
You can now get that ranch that you've been having your eye on there, Marconi.
Hey,
yeah.
interesting how he's back after Bybit went KYC and maybe his referral link's not making him a bunch of money anymore.
Again, Plan B, you're always welcome to come in here and defend it. This is the place for analysts to chat. So tell me, Ben, from your perspective, what's wrong with this $5,000 or even $255,000 price target? Although I'm loving $500,000, I want that ranch with my ponies and my donkeys.
I think we all do, but before we, even the show here, we casually mentioned that there were several flaws, but right here, I just really want to hit on one in particular because it really brings into the spotlight why Bitcoin dominance matters so much and why we just keep bringing it up on our analysis and in the show. Now, to get into it, stock to flow, it's purely a supply side equation with dependencies on market cap, but in economics, we like to draw two lines, and one is the supply curve. This is the function of the commodity's supply characteristics, which for Bitcoin, it's highly inelastic, which is a very fancy way of saying price is very responsive to changes in demand compared to just your normal run-of-the-mill good like corn. So we also have the demand curve. That's the second line. We're really hard with hard workers because we always make two lines in economics. But anyways, where these two curves meet is the theoretical price of a good in the market. Now, I bring this up because when supply goes through its changes and the price of the asset ultimately responds by rising higher, people, users, investors will showcase a preference for substitutes. What this looks like in the context of crypto Twitter is the next greatest thing since Bitcoin narrative. I'm sure those that have been around long enough have heard that line more times than they can recall, but it happens when the price of Bitcoin gets well above its cycle's low and investors begin to seek risk. That's their preference unfolding, and it's why Bitcoin's dominance in the market drops as bull markets unfold. This is a data point we can look at and say, here's the market showcasing that the demand curve is shifting as well, and it's this trait that stock to flow does not include. Specifically, as the market cap keeps jumping up in order of magnitude, these preferences for substitutes get stronger and more emerge. Even at certain levels of volatility, brace yourself, FedNow is likely a substitute. And I'll be clear that it's not a short-sighted view by Plan B. I really like the stock-to-flow model. I think there's merit in it, but it's just one model of many that people should account for. And understanding some of its shortcomings, like I mentioned today, I think helps takes his price prediction and helps us ground it. So there you go.
That's a nice point, Ben.
Yeah.
I like that. Because I think, like, so in that aspect, it's not accounting for what you pointed out, which is just humans being humans, which is you take profit and then you buy free lottery tickets with it. You go down the risk curve and what have you. We see that in all markets. And that's
the primary consumer in crypto markets is a speculator.
Yep.
And the way that they're going to go ahead and display these preferences is going to be a desire for more risk, a greater return, sharp ratios, whatever you want to use for it. That's what's happening and gets exhibited.
Mm-hmm.
Ben, do you see that the model is there a way in which the model could be adjusted and really give deeper insights, or do you have to just take it and work with other models? You added obviously a demand curve line. How would you do that? How would you think about that if you were going to bring that into the model?
Well, funny you should ask there, Marcoti. No, this is what we do. This is the work that we do at JLabs Digital, formerly known as Jarvis Labs. These assets are great because you can go ahead and check out all of these. It's like real-time financial experimentation happening. And that allows you to do all these different models and variations. And that's what we do with token design. We generate these systems. But then you have to go ahead and apply various personas to these economies or systems to better figure out what those preferences will be, what the demand is going to be, and then how is supply going to change or shift over time to accommodate for that. And a lot of this discussion has led to us wanting to do things like dynamic supplies within an ecosystem that I feel like is very taboo in this industry, but people should really start to consider it because it allows for these pressures when demand shows up to not force people to go search out other alternatives. It creates better price stability and ultimately makes the network more productive.
You had such a clever and graceful way of landing that on the back end with with the analysis that you're able to do. I'll just give you the last point. In the upcoming episodes, are you going to be able to share some of this data with the team and the audience?
Yeah, we're getting ready to give our subscribers with those in Oculus access to a dashboard that has some of these metrics available to them. So look out for that in the coming future, and we're hard at work trying to do that amongst other pieces of tech that we look to deploy later this year.
All right. You heard it from the horse's mouth, as they say. And for those who have been listening for the last several episodes, we are working on our video. I'll just plug that right now. In fact, we're doing a test run with members of the team tomorrow, and the hope is that we'll be able to bring that back next week, as early as next week, if not the week after that. So stay tuned. I suggest you like and subscribe so you're aware when it actually goes live. You're not going to want to miss it because these charts, just a tremendous amount of information. I get to enjoy them. Team gets to enjoy them. We want you to enjoy them too. All right. So last point on this. Plan B, again, I'll send out the invite. You're welcome to come on the show and discuss your views on what maybe we got wrong. The whole point of the show is to have some viewpoint diversity and to go down the rabbit hole, see if we can kind of discover where we're missing something. All right, we're going to move on to the next segment. Cody, we're coming up on Like It or Spike It. Are you here with me?
Yep, let's do this.
All right, there's the enthusiasm I love. Okay, our very first one. We got 3 of them. FRIENDTECH, a new decentralized social app, launches a base chain. Like it or spike it?
Like it.
Love it. All right.
All right.
Tell me, how do you like it?
So, well, let's start with what FRIENDTECH is. FRIENDTECH allows users to link their Twitter account to create a profile, and that profile has social tokens that people can invest in. The share price, or the price of these tokens, starts quite low and then increases quadratically based on demand for those shares. And yeah, the more a user is like famous on crypto Twitter, or the more interactions there are on FRIENDTECH, the higher the price goes as well. And theoretically, this like having the shares allows you to engage with your fans in like a token gated way, let's say. And it really took crypto Twitter by storm. Like ever since it launched like 5 days ago, ever since then it has had 300,000 total transactions, over 20,000 unique buyers. The volume between bought and sold of the shares, it's $13 million as of now. 8 of those millions were on like the first 1 or 2 days. And it just keeps on giving BASECHAIN another win. Like it gives it as the forefront chain, or like the chain of the moment. It started with the bold drag, the meme coin that went to zero, and now FRIENDTECH is the new thing that keeps Base as the place to be right now. Base right now, like the chain from Coinbase, has a TVL of 150 million, and it got like $2.5 million in fees over the past week. It's the number 7 either chain or protocol by revenue over the past week as well. So it feels like Coinbase just keeps on winning. And yeah, it's exciting to see new protocols spring up in L2s.
This is exciting. It's good to see the Coinbase, the one that's really hurting, continue to thrive. Well, it sounds like an interesting project. If you're an investor, do you just buy a token and hold it, or are you actually staking it and working off of someone's reputation?
No, the idea is that, I don't know, you like Kobe on crypto Twitter, so you buy shares in like Kobe shares or Kobe tokens, thinking that
Okay.
price will go up. Yeah, that's how it goes.
So now we get to speculate on personalities
people, yeah.
on X. I
Yeah,
love it.
I don't know if I love it. Like I think it can evolve into quite dystopian futures, but for now it feels quite, yeah, it's not as bad.
So you're promoting Black
Okay.
Mirror, if that's a show. I don't think I've ever seen it, but I think that's the dystopian future. All right. Okay. Well, that's good though. It's an interesting project. It's good to see something come out of the gate and get that much interest. All right. Well, let's move on to the next one here. And I'm going to butcher the name. I already told you offline I'm going to butcher it, but I'm going to give it a go. Action Aria, a protocol that tokenizes shares of private companies, reaches 20 million in TVL. Like it or spike it.
Like it.
All right. Walk us through your analysis.
So I'm not even going to try to say the name, but this company, as you said, allows Swiss companies to tokenize the shares and for them to be publicly traded. Like the Swiss stock market is quite tiny. Apparently, it only has like 230 companies that are publicly traded over there, and there's like 500,000 total companies. And it can be really good for private companies to tokenize the shares because they can have access to liquidity that was not there before. And it's also a really good avenue for retail and people that would not usually be able to invest in private companies to find a way to do so. If you see the returns in like private equity over the last few years, they have outpaced the returns in public markets by a sizable share. So it's just a great solution for retail and companies that I think it was a long time coming. This company in particular is still not huge, but I think it's doing really good for now. It's been up and running for a few months. It has almost 39 companies with tokenized shares, if I'm not mistaken, and a cumulative total market cap for all those companies of almost $500 million. And yeah, a TVL, so that would be the money that people have invested in, of 20 million as of last week. So they are doing pretty well. And yeah, I think it's one of the first solutions in this space, but I think we will see a lot of those coming up, like from different countries, because I think the solutions will be quite restricted geographically. But
Now,
yeah, excited to see more.
Yeah,
What's
no,
up?
I'm very excited, and we don't have a whole lot of time to dive into all of the details on this project. But doing your research, did you come across? Does this give you similar legal rights as owning stock?
No, like it doesn't give, like it doesn't, the companies that are emitting this kind of stock, they don't have the same they don't have to follow the same rules that companies that emit actual stock shares have to. So like you don't get access to like updated financials, you don't get the same access. At the end of the day, if the company wants to give that to you, they might, but I don't think they have to. And I think in most geographies, the legality of all this is still quite murky, and maybe even in Switzerland. I know that they look at that, they have a whole legal team that they advertise for companies to help them through the process and whatnot. But yeah, I think we're still some way to go before like this being a final solution, and definitely not going to see this in the States anytime soon.
Right. Well, it's a fascinating experiment, proof of concept. I look at this and go, this is, my mind, when I got into crypto years ago, this was one of the things I was excited to see. So it's great to see a company actually giving that a go. All right. Well, we got one last one, and I think this may give us a little bit more discussion point. Zaki, one of the godfathers of Cosmos, defends the Agorix token BLD will be a better index of IBC than Atom. Like it or spike it?
Like it.
All right, you're going to have to decode that entire statement.
Yeah.
Walk us through what you
Let's-
have here.
Let's start with what IBC. Well, let's start with Cosmos. So Cosmos, it's a federation of different app chains, and the base layer is supposed to be Atom or the Cosmos chain. It's all a bit, I don't know, they could have gotten different names, but yeah. The Cosmos chain was supposed to help secure all the different app chains that form part of the network. So you would have your DEX, you would have your chain that is used for stablecoins, and then Atom would be the one used to secure all that, and among other things. If you look at the success of Atom, it really hasn't done what it's supposed to do or what people expected of it. And I think everyone in Cosmos land has been looking at, okay, what's gonna, like, are we gonna fix Atom or is something else gonna take its place? And I think Agoric might be the project that actually does take Atom's place. Agoric is a smart contract chain, so it's like Ethereum. People can write smart contracts on it and create apps on top and whatnot. But the differentiator is that people like it, the smart contract used is JavaScript. It's a slightly different JavaScript to the one you would usually see, but it's basically the same, and it has a lot of security guarantees that I think a lot of people are very excited about. So what Zach is getting at is that if Atom is not going to be the base money and basically the forefront of the Cosmos ecosystem, Agoric will be. And if you look at like all the successful chains aside from Bitcoin, all of them are like smart contract platforms. So if you see, like, if you take Agoric and it is successful in the end, it will probably be a good index of like the success of Atom. And just to finish off, IBC is the inter-blockchain communication channel. It's kind of like bridging, but all the chains in Cosmos land can talk to one another and send tokens to one another, and all of those messages are secured. So it's not like in EVM chains or whatnot that like you're likely or like not likely, but like it's not sure that like the tokens that you get on the other end are backed, or like the messages don't really get there. It's a much better solution, but it hasn't had the success people expected to have just because Cosmos as a whole really hasn't taken off. So yeah, hopefully Agoric is the thing, or like the project that changes the tides here.
This could actually give it a new, I guess, breath of life and actually help it, as you said, help it gain some traction.
I'll jump
Ben,
in here,
I wanted
Marconi.
to bring you in here. Yeah.
Yeah, because, Cody and I talk Cosmos because we're unfortunate bag holders to date of Atom that keep wondering what's going on. And I think it's just one of those mid-curve tokens that, many that start becoming researchers in the space kind of gravitate towards. But Cosmos has had these existential crises of like, why is this token not doing what other tokens are doing? And I think one of the debates, I believe last cycle, was around this value accrual discussion and why are the economics not kind of sound so that the Atom token starts to respond better to all these users. I mean, anybody who's used this ecosystem, like, it is very smooth to go from chain to chain. It's probably one of the best experiences, at least I have, of bridging assets and just kind of working within DeFi. Agoric, is this going to be a new breath of fresh life? I mean, we're going to have to use Ray's analogy. We need a system, a galaxy system to show up. We need all these various planets. We need all these protocols, applications to show up that start to bring this BLD token to different protocols and find different use cases. Because right now, the primary use case, as these tokens keep getting unlocked, right now, essentially, I think at the first of every month, there's a new unlock that takes place, but you don't have a lot of use cases right now for the token. Primary just being staking of, I think it's around 45% of the data I'm looking at on Poolbase staking site is accurate. What are we gonna? How is this project going ahead and accrue value to the token? Like, I don't think we're quite there yet. I think we need to see the the maturation unfold, TVLs start to accumulate on protocols and better users that accrue value back to that token.
Okay.
Yeah. One
Cody,
interesting
yeah,
thing
last
about
word.
oh, maybe I was gonna open up a new segment. We can leave it up for later, otherwise. But something that like I don't know if Ben knows. I think it's quite interesting on this project is that BLD, the agoric token, is used for staking rewards. Like it's used for staking and it like it's emitted towards stakers for now until a certain point, and after that point, it will be the fees paid in the stable of agoric called IST that will actually be paid out to stakers, and it is also IST.
Are
The
you
token
trying
that
to get me
people
to
use
just
to
like
pay
throw
fees.
this mic across the room in disgust?
I'm just opening it up. You can think about it. We can revisit it next week.
That's a can of worms right there. Like it just
I know it
completely
is.
throws the use case of BLD out the window. So it's for me on my side and the way I view systems like this is not the best way to go about economic design for the protocol. But that kind of is a trend within Cosmos. Like Osmosis just completely destroyed the value of their token because of the way that they handled the economics and unlocks, and liquid staking was just all just sorts of a mess. But we'll hopefully we come back to the Cosmos again and maybe pick another one up and see if we can maybe put forward some proposals or something here to help.
That's I'm kind of left with this feeling like you guys are, as bag holders, are kind of optimistic, and you want to be optimistic about some of the changes that they're making, but it feels as though they still need to figure out, they still need to make some more fundamental changes.
Well, you
We're
can
the
look
guy
at
in
it
the
like
corner of
this.
the room at the party saying, "Did you hear about the new Cosmos?" You know, update?"
Here's a flash drive. I can give you some. I can give you some of my tokens.
Sorry to cut you off there, Cody.
No, I was just going to say that eventually everything that happens in Cosmos is also good for Ethereum, because Cosmos is where like all the things are tried out, and like a lot of the things that are implemented on Ethereum happen first on Cosmos, but then Cosmos just up and like they drop the ball completely, and Ethereum can just implement whatever the best solution on Cosmos has been found out to be and get all the rewards. So it's also good for y'all's bags. Don't worry about that.
Good for y'all's bags. Okay. Well, it sounds like at some point we'll have to come back and have a deeper dive discussion on the economics and the design of it. So let's table that and bring it back at the right point. All right. So I want to move on to the next segment. We got the deep dive, and really just one topic here I want to cover. It's an interesting one. We've on previous episodes we talked about the FedNow project, and which I think many listeners will be aware of, but it's a new digital stable coin. Well, actually, I'm gonna retract that. It's a new payment system it's being rolled out by the Fed, and there's a lot of discussions about where that will go. Eventually, going to more of a digital dollarization, if you will. And so we had a little bit of interesting news this week when we had HBAR rallies on FedNow edition of HEDERA-Based DROPP. And just to give a little bit more life to that, I'm just going to read from here. This comes from a article, I believe, on CoinDesk. Hedera's Hashgraph's HBAR token has surged over 15% after the U.S. Federal Reserve's instant payment platform FedNow added DROPP, a Hedera-based micropayments platform as a service provider. I found this very curious, given that it sounded like it was an entirely a closed system. Then you had Hedera coming out there and maybe doing micropayments. So help me unpack this, Ben. I think you did a little bit of research into this, or at least looking into it. What was your perspective on this headline?
I did. It's actually a subject of the blend that's going to go out probably around the same time as the episode. But yeah, it's like one of 108 use cases for FedNow that is in their showcase section on their site. But that fact that they're on the showcase, it's like, hey, these are one of those things that you could use FedNow for. That doesn't mean it actually will happen, but it's on the roadmap, and you could do this too. And the fact that there's 108, that's cause to just go ahead and temper expectations here a little bit, because you have major service providers listed on there as well. Like Plaid was one company I made an example of, but has like 11,000 bank connections and 200 million users. So it's stiff competition. Do I think DROPP's going to go ahead and win over the crypto crowd? I have a hard time believing it, because they're going to have to do KYC at some point in that process to onboard at FedNow. So I don't feel too optimistic.
Yeah, I don't either. Haven't looked into Hedera in a long time. What is your perspective on that project? Is it aligned at all with the ethos of crypto? Does it just get a bad rap? Again, my research was years ago. I haven't looked into the project, but my sense at the time was that it was extremely centralized. It didn't actually offer many of the decentralized features or principles that many in this industry are looking for.
It has this governance council that makes it basically a permission validator network. And a quick look at that list of names, and you'll quickly see Google, IBM, Boeing, T-Mobile, Dell, and a few others. And those aren't usually the names you associate Web3 and kind of permissionless ethos with. But nonetheless, there they are. However, they do make note that they want to get to a permissionless public network. So you kind of have to give them kudos that they are saying, yes, we are in fact permissioned. So this is our plan to get towards that state. But, the way that I kind of view this news is it's good, right? We have a foot now sort of in the door. Do they actually bring FEDNOW in? If they do, great. We are now one step closer, and hopefully over time, either we can showcase the importance of this decentralized type of ethos that a lot of us share here, or somebody's going to go ahead and figure out a way to tokenize, one of those digital dollars on the FedNow settlement network and throw it on a blockchain. And it's going to be basically ask for forgiveness instead of ask for permission. And we're probably going to have a nice conversation in Congress. And whoever does that, they're going to basically create the conversation at hand.
Okay. Ray, I want to bring you into this conversation just briefly. Ben just mentioned that we should temper our expectations because of all the other projects that are listed as possible use cases. We did see, I think, on this news that the token surged about 15%. Do you have a similar perspective as Ben on what this might mean for, decentralized technology maybe making its way into FedNow?
I don't have a concrete perspective on FedNow and whatever blockchain they might use. If it's HBAR or Hedera, all the more power to them. I don't really see how the token is integral to actually using the blockchain. Very similar to XRP and Ripple. XRP token's not used in any of the services that Ripple already, has banking relationship or clients with in the Gulf and other places. So I really don't base my expectations on the token price performance based off adoption of that blockchain when there's really not. I don't see how that token is actually going to be used, given that the government here is so anti-token and views all token issuances and ICUs and whatnot, IDOs and all that is unregistered securities issuances. So I can't say that this adoption makes me long-term bullish on any of the projects that are selected. Maybe HBAR will see some sort of institutional or enterprise adoption elsewhere in the private sector or in the corporate world, and perhaps just the news, the sell the rumor, buy the rumor, sell the news impact of that might do wonders for the token. But I think as an industry, we've moved beyond the whole institutional adoption of altcoin leads to fundamental reason to do fundamental analysis and be long on token for 3 to 4 to 5 years like it's an Apple stock. I think the jig is up and people actually know that, the token was just a way to build a runway and to build a business and to raise funds in a grassroots way. Yeah. But the token is not going to be used for anything and legally might not even be able to be used for anything. So that's my view.
No, I think it's a good perspective and a risk that anyone who's coming into the space should be aware of when you're hearing someone advertising that they're going to get adoption by governments or even private enterprises. The token may not be associated with the final network. So I think we can all remain a little bit, say, cautious as we see any kind of rollout of any decentralized technologies for the FedNow. With that, let's get to the final segment here. This is a fun one, which I'm going to ask the guys here what they think of Michael Burry's latest, well, let's say his big bet. For those who somehow have been living under a rock and never are unaware of Michael Burry, he is famed for shorting the market and making a killing during the great financial crisis. And he just put out 2 bets, and this is coming directly that I'm getting off of X. Breaking Michael Burry just shorted the market $1.6 billion, bought 890 million of SPY puts and 740 million of triple Q puts. Wow, that's 93% of his entire portfolio. Look out below. Guys, okay, I want to know, what's the bet? Do we think he's going to make good on this, or he's going to have to liquidate and take a loss? JJ, I'm going to start with you. What are the odds?
I think it's interesting. I don't know what I put the odds at. So obviously there's some discussion over that. It's just the notional value. So you could buy a ton of short dated puts and they would add up to some absurd amount. That's not actually, the 1.6 billion isn't the actual amount he paid for these puts, but it's still, any way you slice it, it's a lot of puts. Interesting given where DXY's at and kind of the different things we've been discussing regarding the VIX and just volatility in general. And I could see a scenario where we could have a wipeout crash before the end of the year. That's something that's been on my radar. So it's an interesting piece of confluence that he's taking that bet as well in some aspect. How large it is, who knows? I put it at 50% probability.
50% probability. All right. Okay.
Right down the middle.
Right down the middle. Okay. That's safe. That's safe. Cody, do you give it 50% higher, lower?
I mean, I don't know when the puts expire. I don't know when he bought them. I don't know anything about those puts. So it's difficult for me to give any.
I don't think he's gambling on weeklies. Like I don't picture
don't
Michael
think
Burry
it's-
saying
Maybe
that,
he's just buying zero DTE for the lols. Like you don't really know.
But I do think that he's probably short. Right, like all these different factors we've been discussing, it would make sense to me that Michael Burry would be short right now. Whether or not.
All right. So Cody, I hear that you're going to go with 50-50 just as a default because you lack the
yeah.
information.
Let's go.
I'll actually up the odds and I'll say 70%.
Oh, there we go. 70% that he makes good on the bet.
That it pays out for him. I think.
All right.
Make
Like
money
if-
on this trade.
Yeah, if you tell me that like we're betting on like if the market is going to be lower by I don't know end of September, then yeah, I would agree with Cozy. Like I see it going lower by end of September, so that would probably be that. Mr. Burry makes some money.
Okay. Ray, are you a betting man? Are you willing to take some odds here?
Yeah, sure.
Okay. Well,
Sorry. I think it's sorry. I was thinking about my percentage, but I think it's going to be a profitable trade for him. So I'm with Cozy on the 50 to 70% of a good outcome. I think he's just hedging his long portfolio. And like Cozy said, everything we're seeing in the market on the macro side suggests that equities might have hit a roadblock, and that we are seeing a bit of a pullback in equities. And one will hope that during the rebound, it translates as consolidation. We hope that the Fed continues to be successful in its fight against inflation and all that sort of stuff. So it's been a monster year for stocks, just like it's been a monster year for Bitcoin. And we're seeing a bit of exhaustion in markets, in crypto markets and equities. So it makes sense to go ahead and either take profit or hedge. And Burry's smart enough to do that. Bond yield curve is still looking like really stupid. So that's a flashing indicator that maybe quarter 1, 2, 3 of 2024 might not be as beautiful as everyone thinks. So could be a good time to hedge.
The
okay.
signals are adding up. It's starting to,
All right.
like, typically, you'll see in September, kind of everybody's on summer vacation now, but there's always that impulse when people are back to the office. There tends to be sell-offs in legacy markets. So
Yeah, and the lagging indicators of economic health and consumer demand and, credit card balances, mortgage denials, mortgage application denials, car loan application denials, people who are delinquent on their mortgage and car payments, like all those things are ticking up, and you still have layoffs at rapid clip in high-tech sector, while high-tech sector earnings are now all out, and people are wondering, okay, what's next? So it does make sense to start hedging, doesn't it?
yeah, how much better can it get with whatever it is, 6% interest rates or wherever we're at now?
Yeah,
They'll make those
near 8.
minutes a little bit more interesting to read if they actually
Sure will.
talk about some of the points you just mentioned.
Hey,
So
yeah,
true.
Ben, I want to bring it back to you. What are the odds? What are you betting?
While we're sitting here, I was like trying to figure out what is he doing nowadays? Like, what is he running a fund, or is he just kind of managing his own capital?
He runs a Twitter account that puts out counter trades.
I think it's a family office.
I bring that up because, what made him famous is he had his headphones in and he went ahead and really did some deep analysis, mostly because this was his job and he needed to go ahead and make a name for himself. And he already has a name. And now he can just show up, delete everything he's ever said and kind of see if everyone forgets about it, and people tend not to. But in the short term, like if this is going to be something he closes and unwinds at the end of the month or in September, like I think he's actually going to be right. But if he's going to hold this to expiry at the end of the year, I think there might be a little bit worse than 50-50 for him. But if he's holding it all the way to, the end of 2024, then I think that actually is a good chance he's right.
All right, good chance. So you're saying 70% depends on the expiration. Which
yeah, it's like near term 70% being right, and then midterm like 30% being right, and then long term 70.
Okay.
Whipsaw.
Yeah.
Options is all about time, right? Time to expiry.
That's right. That's right.
So,
Okay. Well, I'm going to give him a 90% chance of being right because I just follow anybody I can find on Twitter, and whatever they say, I think is crypto gold. No, I'm kidding. It is, to me, it's very curious to see these put out there. I think someone mentioned in the chat, this information was actually from June because he is required to file some information about his holdings and major positions. And so this information came out. So it's a little dated at this point. And there's, of course, the question about the notional value. So I think, as everyone points out, there's good reasons to be hedging. There's a lot of interesting risk as we move forward. And there's some interesting events to happen on the horizon that Ray pointed out that we'll continue to monitor. So that's going to do it for this week's show, though. I want to thank JJ, Ben, Cody, and Ray for joining me this week. Just a tremendous amount of detail in alpha. And so I appreciate you guys showing up. Always something to learn. I suggest if you're out there checking us out, hit the like and subscribe button so that you can be aware when we actually go live with the video, which is coming soon. As I mentioned, we're working on that. It's going to take a little bit of time because everything takes a little bit of time. And if you can't wait to hear the alpha because 1 week is too long, I suggest you find all these guys out on Twitter. They're going to be there. They're also going to be, I think, on some news spaces eventually. And last thing I'll point out, we do have that survey I mentioned at the beginning of the show. Check it out. Let us know your thoughts. We want to hear more from you, what you're looking at, and what you'd like to hear more of. But for now, the weeks are crazy. Crypto Twitter is crazy. Be safe out there. Keep your powder dry and safe until you're ready to make good decisions. This is Marconi White signing off.